Hi, I am Yanis, also known as the Conscious Day Trader, and on this channel I'm just going to break down the trade from this morning on the pound dollar. We had some big news yesterday, and we had a big drop on the pound dollar pair, and we found some good opportunity, and my profits for today were 300 and something dollars, but I'll show you that during the trade. And for today, you're going to have a treat, because I'm going to show you the whole process from the beginning of the day at 7 a.m. when I started looking and creating my plan, all the way to execution and the delivery of the goods. So we're going to start with trading view, and I cleared the chart. Let's make sure we've done that, removed all the drawings, and we're going to take the replay. This replay is now at 6:30, 7 a.m. London time. Just to check, that is London time. So this is the information we had. And as with all ICT trading, you'll take your idea and bias from the daily. If you follow in my previous trades, we were discussing about this buy side liquidity here. So the price went up, took out this liquidity, the buy stops, people that were shorting, they would have their buy stops here. The algorithm took them out and now came down. You may argue that was the outcome of the news, but nevertheless, this is how the price reacted. So what we're going to do on the daily, if we take that out, we want to determine, because we're not swing trading and we're day trading, we want to determine if the next candle is going to be a bearish or bullish candle. So today. And as we saw on the chart, the previous day, we had a big sell-off on the pound dollar pair. And from Monday all the way to the end of the week, Friday, this is the biggest move that's happened. So what's the chances of this selling further? So I'm going to argue, yes, there's a chance that this will sell off to take liquidity below this swing low. But there's also the liquidity up here. So the market's going to break either the top of this or the bottom of this. And as we know, Friday normally is a quite interesting day because people want to take profits, and normally the big position of the week has happened, the big move. And in my opinion, that was the big move of the week. So what I did is, with any ICT trading, the first thing you're going to do to create bias on the daily, you're going to create your buy side liquidity zone, which is going to be your horizontal array, the high of the previous day, daily high, and that is going to be your daily low. If we change that to green and save that as the daily low, and that's okay. And actually I want to put that below the bottom side so we can see it. So now we know we have our arena where all the trading happened yesterday. And why is that relevant? So we're going to create our bias. So you can go either way here. You could be saying, if the price is going to open higher, we could expect these daily lows to be broken, because we've got this sell side. We've got this sell side liquidity. People that were going long, they will have their sell stops here, and we've got buy side liquidity above here. So that's the two scenarios that's going to happen. There's a third one that's going to consolidate between these two lines. So I was for the day long, and the reason is because we had this move, and even if even if the price goes to break this below the sell side liquidity, it normally retraces before it continues to take these lows here. So that was my bias. And how did then, from having a long bias, start looking or finding some trades to work with? And this is 7 a.m. So this is what I saw on the 15-minute. And as you know, with any ICT trading, we're going to introduce some lines that are going to help us identify the kill zone. So the London kill zone, that's the end. Just going to change that to London kill zone. Save that as London kill zone. And now we have a nice line that we can identify where it starts. And that's the news that came up. Let's hide that for now. So we have the open of the pre-market open for London, and we're going to add another line which is going to end sort of the kill zone area. And what that means is this is the area where we're going to be identifying a trade idea. If it doesn't happen in this area, this is where the algorithmic trading comes into play. Then we would wait for the New York zone, which we can put later in. But for now, that's what we had. So I was looking for longs. So in order to break, we discussed last video, we discussed about the power of a power of three. What happens is the price, if it's going to be bullish, normally is going to be a manipulated move, a Judas move on the downside, and then go all the way up to the original position that it would want to be bullish, and then come and close the day on a bullish candle. So that's what the idea was. I wanted to see, if we go back to the charts, I wanted to see this price breaking the daily low, taking liquidity out of the daily low for people who are seeing this as an indication that it goes continuation lower, and then we are getting a supreme discounted price from up here, with the idea that the price is going to come back to equilibrium. And what I mean by equilibrium, ICT discusses this. If you put a fib line on there and you take the midline just there, above the midline, so 50% of the move, you have premium move, so the premium pricing and discounted pricing. If you're in premium area, you're looking for shorts. If you're in discounted area, you're looking for longs. So we were looking for longs. So I wanted, in an ideal world, this to come below this daily low to give me a good structure, break of structure on the upside to take a long position. So that, if I change this to my equilibrium line, so we can see it there. So that is what we're looking at. We've got to play with. Then, now the idea is in. Let's see what happens. First candle comes down. Now this is the area where, if we go jump to so this candle here, if you saw, it didn't break the low. And if it didn't break the low, then you would be starting thinking, is it actually going to break the daily lows, or could I find an opportunity for this? Should I be waiting for the next kill zone? But it did convincingly break the low, so now I am happy to take a long position trade. So now what we're looking for is a structure that is going to give us a long position. And what these structures look like is we're going to need to break a swing high. And after breaking out of a swing high, break of structure, you will need to be entering in a fair value gap, a long fair value gap. And I'm going to show you exactly how that looks. So let's zoom in into this area and see what it looks like on the 1 minute. So these were the equal highs after it's been selling off from the morning. It broke that low of the previous day, And now it started doing this consolidation. So this was the area where I wanted to be long. And I saw this pushing up, and this feeling was quite difficult to sit with, because I thought the move is going to just go and leave me behind. But in ICT methodology, the price will always come back to fair value to allow traders to get positions going long. And this is what happened here. So can you find a fair value gap that you can trade on the upside? And you can pause the video like ICT says and look for that if you want to use this as education. But I'm just going to quickly show you. We had the up push and we had two fair value gaps. One was down here. And the second one was here. Now, another thing that you'll be getting scared about in this one is, what if it only tags the top of that fair value and goes away and you lose the move? That's why I started with a small size. I put one position in as soon as I got tagged here, and we're going to indicate that with a nice little arrow. So this was my first position there, and it came down. I got a second position on the low of that fair value gap, third position on that top value gap, and fourth position on the low there. So these were all my positions in. I had broken them down into 0.25s and some solid positions. And what happened, it tagged me in and up it went. Here I was about $200 up. And then it came back down. And it came really down. And this is where it started getting, you start getting a bit nervous about the trade. Because what's happened here is broken the low of the swing low. It's broken structure. And if you're going short, this is an indication that you can take a fair value to continuation of the move. But I had a strong, I stacked with my bias, and that's a really key thing. When you have done your analysis on the daily, there is going to be an opportunity to go long and short in the market. So don't switch if I switched my idea here and I closed all those positions and then I said, I'm going to go short, what's going to happen is the market is going to take your money both ways out, because you're going to be wrong both ways. So if you have an idea and your bias, stick with it, and the market will offer you a price to enter long or either short. So I had my stops below this area here. So even if it broke that low there, I was happy to see the price come. I think my stops were roughly around there. That if it broke there, I would be convinced that this market is going to down here. Okay, so that was my stops were here. If it broke down to that area, my idea is wrong, and that's it. Let's go back to the 15-minute. Sorry, we were on the 1 minute. So this kept going, and it went down, consolidated, really down, but it didn't come back to that previous low. It came close, but it didn't, and that I think I was in heat for like $100. So what happens next? Grab a coffee, wait for it, and then you trust your idea, and little did you know, it went all the way up. Now, where did I take profit? I took profit on this high here. And someone will say, oh, you missed all that profit. Look at this going up. Yes, that's something that I need to work on, holding that trade. And you will see, and I have a strong belief that this was going to go a lot higher. I'm not sure where it is at now. Yeah, So as you can see, the idea was perfect. I got a great fill down at the bottom, and so I had to sit for a bit of heat, and off it went. I got out in that black line there, because that is one of the rules. You can take partial on the on this move here. Why did I get out here? If you can see on the sell side, there's a fair value gap there. So if this was going short, that fair value got filled, then it came back up, filled the top of that fair value, and potentially could continue on the downside. But because it was $300 in profit, I was happy to take it, and it was a Friday just to finish off the week. But if I had left that, that would be that's something that I need to work on, and in the future videos hopefully you'll see bigger numbers, just because what I could have done, hence size, is just trail the stop, so for my profits. And as it broke that, I could have trailed the swing lows, so bring my stop up. If it came down below that swing, I would be out. Below that swing, I would be out. Below that swing, and just trail it up. And I would have probably been tagged out somewhere. I would be tagged out here. So I would have taken all the profit up to that daily low. And there you have it. Now it's taken this high. It's taken this high. Where is it going? Potentially, who knows? But potentially all the way to equilibrium. From a discounted all the way to equilibrium, which is, if we go on the hour, up there. So if it breaks these highs, it's highly likely that it's going to fill this. And what do you see here? Look at that fair value gap on the hour. Could easily go and take that out before it continues down. So there you have it. That was my break of the day. I just want to show you the profits of the day. And that was there, 330. I call that a good day. And if we see, that is my son crying. So that was probably my time to close this video. Let me know if you liked the video, and I will in the future videos make sure to show you how I really enjoy trading the ICT, because it makes sense to me, and it also I can trade in the morning and be done for the day. With having a son, you've got other things to do, and if you don't understand something, write it in the comments and I'll try and explain it to you. Or you can go on the 2022 ICT mentorship, and it's got everything is in there. It's a free course for everyone to learn how to trade this. Also, the Scruffy Trader, I always bring him up because I manage my trades with the Scruffy Traders method that is called Madness. If you do want to learn how to do that, go and find him on YouTube. He has a Discord, which I'm part of as well. And we'll see you for next week. Hope everyone has a good week. Make sure you subscribe. We are very low on subscribe numbers. If you're enjoying this Forex channel and the trades, make sure you subscribe so this grows a bit of following. See you next time.